Exploration stocks. So location. Can they drill year round? I know up in Canada, a lot of the, Yukon, none of it, some of these cold places, Alaska, they can't drill year round. I prefer, when they can. It's tough, the Golden Triangle. I mean, when they're only drilling 6 months of the year, it makes it really tough to kind of get ahead. That's kind of a kind of a downer, even though I do like those areas. I like the Yukon and the Golden Triangle and British Columbia. But that's the one thing about location. Can they drill around? The other one about the location is it cost extra money if there's no roads. So that's another issue for exploration stocks. Is it easy to get to? Um, you know, that those are can be issues. Size of the property. I actually talked about this earlier. So less than 1,000 acres kind of turns me off. I like to be 1,000 or higher. Number of targets. I always like it when there's a lot of drill targets, right? More the better. They say they have 20 targets over a 5 kilometer trend. That's the more the better. Geology. You know, is the geology conducive for discoveries? That's where they'll tell you. The CEO would tell you about the geology, give you some pictures, and say, look, this is where I drill hole, and the geology goes, all the way down here, So you really want, is it conducive? That's kind of where Mexico comes into play. Mexico's got fantastic geology for silver discoveries. Um, Drill results. I'm gonna have a separate slide for this. Buzz, are people talking about it? Are people excited about it? You don't want to be the only person that owns it. The chart, is it trending? Has it already broken out? You have to decide, are you buying are you too late, really? And then are you too early? So if you're too early, the chart's flat, right? It's not doing anything. And if you're too late, it's went straight up. Maybe you're a little too late. So you want to look at the chart. Cash in the bank. These companies are exploration. They're always raising money. It's always nice when they have like 20 million. It's always a great sign for an exploration company that's got a lot of cash. And then the other one is the share price. So if it's like over $1, that makes it easy for them to raise money versus a company that's at 10 cents or less. If you're, 10 cents or less, you're going to dilute the heck out of your shares, right? So we like to see a share price over 50 cents, like ideally over $1. Makes it easy to raise money. And the ease of raising money. Some of these companies have no problem, and you can tell by if it's a full warrant or a half warrant. These companies are paying full warrants. That's not good. That just means they're having trouble raising money. It's really nice when you see an exploration company that doesn't need warrants. That's kind of rare, but it happens. You only want a half warrant, and then they'll tell you how easy it is for them to raise money. Big name investors is always nice when, like, Eric Sprott's involved or another big name, or Ross Beatty, something like that. And there are enough insiders. I've talked about that before.